Just always remember, futures trading is very risky and only risk capital should be deployed. And as mentioned, we're short on mini NAS right here at 39 on this yellow line. And I'm looking for a move down to this white line and just a bit lower down to the potential 32 to 33 zone if this trade's going to pan out for us. So right now we got a real key level at 37.50. I'm watching to see if those prices can dip down under 37.50 and keep the pressure on under 37.50, knocking the price down to 36 or lower, holding under 37.50. They may go 37.50 and the riggers may whipsaw them right straight back up to 42. That's a risk we have to take. It's a strange day. They raised interest rates yesterday, and lo and behold, instead of the market doing what it normally does when they raise interest rates and crash or move down or show a lot of selling pressure, they're pushing back up to another all-time high, which is ridiculous, but that's the way this thing's being played out now. I believe the market's getting a lot of help from the riggers. They're spending an extraordinary amount of money to prop this thing up. What their goal is, I don't know. I have no idea. Just a game that's being played. Let's see if we can hold them back. They won't even let this thing go now. It's got more reasons to go to pull back. I think we're going to be okay ultimately for that move down to 38. Let's see if we can smash this thing down under 37.50 to start. That's step one. Step one, getting that price under 37.50 and seeing some additional selling pressure come in here. Love to see these candles turn red. Love to see some red ink on those candles here. A little bleeding on the sell side. Little red ink there. But these riggers keep popping them up, supporting the market. So we're going to try to hold, do our best to hold short and see if we can keep this price under 42 without any goofy spikes back up over 41.50, and see if we can keep that pressure on the trade on our 39 short and get this thing to start breaking down under 37.50. That's our first step. And right now it's starting to look like a very challenging step. They are not letting this thing go at all. It's completely ridiculous, but they're not even letting the market slide at all here. I've got signs that suggest they can and will, or the prices will, the market will, but we've got rigor interference coming out of our ears here. Riggers, usually that's the Federal Reserve, they're rigging the market up, they're propping the little dips, and it's showing up on our mini NASDAQ contract here. They're operating up in the cash market most likely. So it's just it's a goofy game that's being played here. It's been going on now almost a year. Unbelievable. No pullbacks. Where is a 3% pullback? Very bizarre. I love the bullishness. Oh, keep it coming forever. Sure. But make 2 to 3% pullback so the market can refresh itself and run a real bullish course, not just this fake propped up upside. Here we go again. Anything but let the market pull back in an honest way. They always choose the jam the market higher with the spike candle routine. Still holding out for what I believe should be a lower move, potentially down to 33. But so far, it's like pulling teeth here. It's a weird day. They raised interest rates yesterday, and the market isn't responding on the sell side. Here's a crude oil trade. Matching dynamic trend bands. Pull back the sig line 78. They're up. They're down a little from there. I wasn't watching this, so 78 was your entry there on this yellow dot. Everything's good to go. Watching 78. I'm going to have to run two contracts here. Oh, here we go. 78 to 68. It's 10 ticks. And then so 70 to 68, right in that zone. We want to see that price drop down under in 70 towards 68. Right, drop down in that zone under 70. That's where the trade will fulfill itself. Let's see if we can get them going here. So far, so good. But we got to watch out for the whipsaw. I'll try to watch both of them here. Okay, watching for a dip down under 70. If that price jams under 70, just hit your exit button. Get them out at 68 to 70 uh, for a 10 tick move there. Look at that. Here they go again with the stupid spike moves, trying to force us out of the trade. I'm trying to hold on, but they are back to playing games again with the goofy rigger spike candles. Anything rather than run an honest market. On that last move up there, I thought maybe, just maybe, when they dipped them back down to the low was 37.50, I thought maybe, just maybe, these foolish riggers are going to settle down and let the thing make a natural pullback. Well, lo and behold, they're goosing them up again. Unfortunately, screwing up our entry here. What a bunch of idiots.
Order filled.
Exit at the market right there, 350. They're forcing us out. It's one of those days. It's just too difficult of a trading day today on the mini NASDAQ. Crude's going good, but these goofy mini NASDAQ riggers. There's our trade there. Boom. See that? Right into that. You would have got out right there when they dipped into that zone at 69. Hold a little lower, and there's a 10 ticks there at 68. So crude oil, mark that down here, short at 78 for an 8 to 10 tick move lower. That's the method. Works beautiful. We do it every day. Stupid riggers. Short at 39, out at 43.50, minus 450. Forced rigging on the trade, forced us out of the trade. Disgusting riggers. Anything but run an honest market. They just push these spikes. They're spikes. See how they're spikes? They're not natural buying coming in, lifting the market. It's just artificial spikes coming in, jamming the market up. We're going to try to hit them again. Stay ready to go short again anytime. And go short.
Order filled.
Right here at the market, 41 quarter. We're going short again here. Going to try to keep the stop a little tighter if we can. We're short at 41. And actually, it's the same parameter. These are fixed lines, a white line here. Still looking for this 32 dip area, but we got to be careful on this one. We don't want to get them. I got the right pattern here. They should be willing to pull back, but a lot of extra childish games being played by the riggers today, unfortunately. So we had to get out of that trade. We're short again. You saw the crude oil winner coming in here. That's exciting. You got to love that. Look at that, 79, dropping them right down to 69. 10 ticks there. We're short at 41 now. We got stopped out on that 39 short on the mini NASDAQ. I re-entered the trade, and I'm really being careful here. I want to see him start doing what I expected on the early trade. I think we got a chance that they are going to eventually work their way down to 33. Let's hold short here and see if we can get that result without these goofy riggers endlessly propping this thing up here. We need them back under 37.50. Remember the numbers. 31. May have a better chance here. I hope so. Really get tired of this rigging. Anything, look at the crude oil. If you want to see a smooth market and proof what I say about the riggers, look at crude oil. They go up, they pull back. Something, even though it's a strong market, still they pull back, but then what? Then they go up, and then they get exhausted, and they do what? They go the other way. That's called a real market. With these riggers always propping the market up in the U.S. markets, it's a different type animal. That's why I use different approaches. I'm trying to get us out in the first 2 hours of trading, and today they're making it very tough. My guess, plain and simple, is that The riggers know when they raise interest rates, the traditional thing that happens is that day the market gets very weak and usually crashes. So they're working overtime, spending a lot of extra money to prop this thing up. They have been since the early 45-minute chop period. You can see, why is it so choppy? Someone might ask. It's because they raised interest rates, and normally that creates a crash. Well, when it starts trying to crash like this, the riggers have to spend a lot of money to reprop it up. Here it is again, trying to crash. What do? Prop it back up. Then what? Then they go, okay, we got to just blow this thing out because we're sick of these shorts coming in here. So they blow it out, and now my trade is based on the idea that we're close to this fiasco ending and that they're going to allow it to pull back down into the opening range again and move their way back towards the center of the opening range, which is way down 28. But I'm just kind of looking for a 32 type target. If we get that, I'd just be dancing on air if we can get them to cooperate. But that's going to be a big if here. I hope so. Let's see if we can get them under 37.50. Okay, so watching to see if they can slide down under 37.50 to start. Breaking under 37.50. We then watch for the key 38, 36 as the next target. Holding under 37.50, we watch for a dip down to 36. Cracking 36.
Order pending.
Okay, that's what we want to see. We were waiting for this. Cracking 36, which they're trying to do right now. We look for a dip down to 34 is going to be the next key number right there. 34 quarter. Cracking 34 quarters. Stay ready. If we get a hard, fast move down under 34, look for a continuation, but I'm going to try to hold out for that zone down in the 32 to 33 area. That's what we want. They could go a lot stronger, but you never know. The riggers might come in and spring this thing right back to 42 in a heartbeat. Let's see if they can break. Look at that stalling at 36, the exact number I gave you. Look at the games being played here. We got to break 36. They're trying to defend the opening range because they got big egos, these riggers. If the price go back into the opening range, that sends out a signal of bearishness. So they're like trying to defend the market from dropping into the opening range, which I expect it will. If we get down into the opening range and drop them down in there, I'm going to look for a move down towards as much as the center, 28, and we get out at 32. I know we're leaving some on the table, but I want the easiest money possible. And the easy money is not there today in the mini NAS. It's a complete arm wrestling. I mean, actually more like a cage fight. There's two ways I refer to the market. Like yesterday wasn't even an arm wrestling match. We got short. They hit them. They came right down, gave us 4.5 points. Boom, we were done. The next level is like where it's more like, kind of an arm wrestling match. We're like, you struggle a little, then finally, okay, you win. Boom, you take the other guy's arm down. But then the third level, which is the worst, which is what's going on today, it's more like a cage fight with these riggers. I'm trying to short the market, which is where the bias should be heading. At least some, there should be much more punch in the sell side. But this whole nonsense up here is like a cage fight. See, they start pulling them back. We finally got short up here, but it's like a cage fight trying to get him to pull back as the riggers keep spiking him up and spiking him up. We're still in that cage fight, but if we can get this price to break 36 down and the riggers can let them flow back down to 34, stop worrying about it, the price going back into the opening range, then we could ideally get that 34 to crack down right, I'm estimating right in this area here. I don't know yet until I see the reaction. But ideally down to the somewhere between 31 to 33. And if they go there, they're probably going to go to this red line, but I just don't want to take a chance. I like doing my scalps and getting them out there. Now we did lose 450 on the first one, the temptation is always to hold out more so you can make that back plus, whatever, but you're running into risks and using the emotions of, oh, but we lost 450, therefore we have to take more risk and hold for a bigger trade. Well, in theory, that's right as far as making up the money, but you got to go based on what the market's giving you, not on any goofy theories that may or may be right or wrong. So the idea is we're still targeting a move. So watch if we get a hard, fast dip under 34 and holding under 34, and that's still a big if. Look at that. Look at that rigger crap. We still got to be concerned that they are indeed going to head down towards 30. We don't know. The riggers may come in and just throw water on that move. I would like to believe that they can and would and should and could, but we got to cut our risk. Big risk down there at 33 or lower. So watch for a break under 34. If we get a hard, fast dive under 34 and the prices get smashed down to 33 or lower, and it's got to be a hard, fast, one-shot move. If that happens, I'm probably going to clip the trade, just so you know. Okay, we're short at 41, so we'll have a nice makeup trade on that. So you see what I mean? We'll still get the makeup trade plus a very reasonable area for the easier money. I'm not going to call it easy money. This is a cage fight today with the riggers. They're out of control playing games, but I think based on the cage fight we're in with these guys, a break under 36, then under 34, and a drop under 33, that'll be the easy money for this move. So that's what we want to take. It's not easy. It's a cage fight, but that'll be the easier money to get today. 28 or lower, that's a more of a high risk gamble. I think they're going there, but that's not the easier money. That's going to be the much higher risk money. So let's see if we can get them under 36, break 36, knock 34 out, and if we go under 34 and they make a hard, fast dive from here down to 33 or lower, I want you to cover that trade. Breaking 34 and smash them down to 33 or lower, we're going to cover up the short. 33 or lower. Here's 34.50 coming in. Here we go. Stay ready. Stay ready. Breaking them under 33 or lower. Cover that short. Make sure and cover up the short. I don't want to miss this, but I'm just trying to run the parameter. There it is. Boom, boom, boom. 33 quarter coming in. You might have taken them out there. That's okay if you did. That was a good move. Let's try again. Let's try again and hit them at 33 or lower. Half, half, half. Oh, it's a challenge. Trying to get them down there at 33 or lower. We went 33 quarters so far. Some of you might have popped them out. That might have been the right move. I hate to say it, but they might have missed us by a tick. Murphy's Law. Mr. Murphy's always showing up in the futures markets. That means in our room. That means everywhere else. Doggone it. Look at that crap. They went exactly to 33 quarter. I was calling for 33 or lower. They went exactly to 33, and now they're snapping back. Give it another shot here. Let's try to take them down. If you got out, congratulations. If you used the limit and got filled, congratulations. If you hit your close button when they dove down to 33 half or lower, you tried to front run me a little bit, congratulations. I'm still holding out for 33 here. Let's break them down. They're probably going to 28. Let's just be lucky if we can get that 33 or lower. Let's try to take them out. Let's move that limit to 33 half. 33 half or lower. Let's try to get the limit in at 33 half and take them out. They're probably going to 28, but I'm trying to get the easier money here. Let's get 33 half or lower to cover up the short here. We should be able to get it. 75, 75. Oh, come on, Murphy. Get out of the way, Murphy. Mr. Murphy, what are you doing? You're killing me. There's 33 half. We're out. 30 triple tap on 33 half, so we're out. Okay, we got them. So short at 41. We had the makeup trade there plus a little. They're going to 28 most likely. I don't care. I just wanted to get that accomplished. I hope you're getting this concept of being in a room. I'm trying to shoot for the easy money, the easier money, the easy money, the easiest money, and the easier money. When you're in a cage fight, then it becomes the easier money, the easiest possible. I don't care about 28 or if they go to 22 later, if they totally crash. None of that matters. We're not looking for that. All right, so we got 41 short, and we covered them up at 33 half on that limit. 34 to 41 is 34 to 40 is 6, 7 plus 750 on that deal. Got 750 on that trade, so that puts us up 3 points. We had that winning crude oil trade for 10 ticks. Look, they're going to 28 most likely. They might even smash through the center of the opening range and take them all the way back down to this level, dotted thin line, and even breaking down under the opening. I don't care. It's so important to understand. We had our parameter for the easy money. We went in and got it. Luckily, they didn't stop us out again, and we got what we wanted. I don't care about the big move unless I plan on it with a specific, very specific swing trade setup. And again, just to remind you, you can see us making those swing trades on my YouTube channel. Let's go to YouTube, search Mohan Day Traders Action. Here's a 1350 swing trade on the 7th a few days ago. Here's a 9 point swing trade on the 4th. Got a whole bunch of them in here. Here's 11 and a quarter swing trade. I'm just showing you we do make those bigger moves. Here's some scalps here, 5.5 or 5.25. I'm just showing you we got a huge library of trades we've made, winners and losers. I just recorded a winner and a loser there, and the crude oil. I mean, here's 11:25 and 45 minutes. The swing trades usually take longer. There's one that took 45 minutes, all recorded. Here's one for 11 and a half points, 24 points using Elliott Wave. 24-point swing trade here. You can watch the video on YouTube. I recorded it. You can watch it and see exactly how I did it as I explain it and everything. But not every trade is going to be like that. This trade here was pegged for a move down to the 31 to 33 zone. When I saw him tap 33 even, Mr. Murphy had him go right to 33 and then leap him all the way back 36.50. That's when I adjusted that to 36 half or 33 half. I said, let's just get him out. That's all I want to do right now. And like I said, the destiny is probably moved to 28. That's okay. We'll get him down there if we can. That's a good deal. Let's see if we can get him going. Doesn't matter. There's almost 28. There's 28 coming in. There's 28. We knew that was coming, right? But I don't care. Oh, woulda, shoulda, coulda. Oh, look, we woulda, shoulda, coulda made an extra 5 points. Yeah, really? You're saying that, and I know they were going to go there, but I don't care. It wasn't the. This was not the easy money. They could have went 32, and they could have shot right back up to this thin line up here. Then we're going, oh, woulda, shoulda, coulda. You see how that works? That's the beginning trader. They don't understand how difficult these markets are and how risky they are. So I go in after so much years of experience, and I'm technically, I mean, people could watch and say I'm a conservative trader. You can call it that if you want. I'm just a logical trader, and I want the easiest money possible on these trades. You can always get more trades. And we had already been stopped out in the one, so it was a little tricky. Anyway, thanks a lot for being that trade. Congratulations if you held out with us, and we'll do it again.